I'm still kicking myself in the butt to this day. I had an amazing opportunity to buy an established, profitable SBA pre approved business, but I was so paralyzed by fear of getting that loan for this business that I let my fear get the best of me. That business was snatched up the next day, and I haven't come across anything like it since. Although I've been keeping my eyes open, and that's one of the times that if I could go back and do it all over again, I would have taken that leap, did less, got that business funding, and purchased that business. I am Shanice Miller, and welcome to my podcast, Do Less. Yes, that's right, do less. It used to be cool to work 60 hours a week, but the world has gotten smarter and realized why spend more time to make the same or less money. I help small business owners build systems and processes to help them scale and find more time for themselves and their families. I'm going to provide you the best practices and all the tools and tips to scale your business. Welcome to my show. Joe, I know you're all about helping business owners get funding for their businesses so they can grow. Do you see the same fear in other business owners with getting funding that I had?
Yeah, so it's a really great topic. And yeah, I think, we've been programmed, all of us, since the beginning of time. Debt is bad, Shanice. And you think about like our parents or grandparents, they grew up and like don't have any debt, pay off your house as quickly as possible. And, there's some of that I agree with, right? But there's a lot of different types of debt. And, when you have debt on a business and something that can kick off cash flow and help you make more money, that's smart debt. That's healthy debt.
Yeah.
If you take out debt to buy a profitable investment property and, with the debt, with the, after the interest and, your rent, exceeds what your obligation is on the property, it makes complete sense. And it's the same way, in business. So,
And it's like I
um,
knew that. I knew that there were like good debt and bad debt, but it still didn't like take away from that fear because I had been, reading, learning. I had also invested in properties too by that time, but it was just this fear about business debt and like how a business could be a little bit riskier or so, or some of the numbers can be a little bit different. And that kind of like gave me that paralyzing fear. Did you have any, paralyzing fears or anything like that growing up, seeing debt?
yeah, listen, growing up, I was always told again, by my dad, my family to never have debt, and debt is evil. And listen, there's some good of that, right? When my credit card bill came, I paid it off. Anytime I use my credit card, I can, pay, that bill gets paid in full each month. But that's important, right? Because though that I'm usually using my credit card, typically, usually credit card for luxury things, clothes,
Going out to
shopping,
eat.
yeah, going out to eat, and not necessity eating, like luxury, fancy eating, going away, stuff like that. So, so that's stuff that you don't want to like carry debt on. If you're gonna, and that's the difference. Like if you're gonna use debt to buy luxury things, if you're gonna use debt to buy that car that's beyond your means right now, if you're gonna use debt to buy a mortgage for yourself that's beyond your means, that doesn't make sense. You're probably better off renting a small thing and using debt to buy an investment property and build up, your wealth and your income, then go buy your own home and use that money that you're getting, for it. And these are things I wish I would have been, taught to me. I had to kind of figure out on my own. But right now, like a perfect example, I have like 3% on my home. It makes no sense for me to pay off. I get 4.5% in treasury bills right now. So, for me to go and pay off my house right now, it would actually cost me money. So, when you really understand how to use debt as a tool and not get pulverized by, oh my God, I have debt. The wealthiest people in the world understand how to use debt and money as a tool to go and make more money, to grow a business, to build equity, and to make a lot of money from it. And any like the best business people I know, the best real estate people I know, they all have tons of debt and they use it for a number of different reasons. And there's even tax, advantages to utilizing debt that just most people just don't really understand.
Yeah, so that's a good point that I I think that you're putting out there. I want to just skip back a little bit to when you talked about growing up, some of the things that you heard about debt, with it being bad debt. Could you tell me about a time where money and debt was a challenge for you growing up?
I guess as a challenge, I mean, growing up, taking out, your first car loan, you just like
Mm.
you're freaked out about all these things, in the beginning. I was pretty comfortable with risk, growing up. So like I bought an investment property at 21 years old. I bought my first home at 23 years old, and it was $500,000.
Did your parents teach you about that? Were they showing you the ropes and and guiding you down that path at such an early age?
No, I figured it out. I got in the mortgage business at like 21 years old, and
Mm.
even I think 20, and really like started to understand, money. Again, my dad was always like, pay your house off, never have a mortgage. And listen, there's some good in that, and there's some freedom in that. So I don't think it's horrible, but I was never taught like how to use debt as a tool, how to use leverage as a tool for real estate, and then how to use leverage to go and buy a business. I think looking back now to your point, I wouldn't have really had this opportunity. Like I built, National Business Capital from zero. And when I founded, in 2007, I wanted to build this like marketplace. Now it's called a marketplace, but I wanted to build a business loan brokerage where business owners can go to one place and access all types of capital for their business. There was nothing out there at the time that existed. So I had to create something literally from nothing. But if I was going to go, into another business today, unless I was creating something that wasn't, just, wasn't there, I would use, bank funding, and I would use a bank, and I'd put money down and I'd go buy a business. And just like to your point, what you said earlier, you missed out on a great deal because you were stuck on debt. You were stuck on interest. You were stuck in, oh my God, I'm going to be liable for this.
Mhm.
Now, listen, in business, in any investments or whatever that you're going to do, there's going to be risk. Like, so you're going to have to take on risk, and there's risks with all this stuff. And it could turn out great. It could not turn out great, but you have to, try and mitigate that risk as best as possible. But if that was a good deal, and let's assume that you would have executed and continued the business the way it was, or even grew it, by you not doing that deal, by you not taking on that debt, it actually it
Don't kick
actually
me even
costs
more
you
when
it
I'm
costs
down.
you more money. Yeah,
Don't kick me even
like,
more when I'm down.
well, it's you're not alone. I see this all the time from business owners. They have an existing business. They've got a profitable thing that they can do to get them to that next level. And they're looking at the debt, they're looking at the cost of capital, and they're like, they don't want to move forward. But when you break the numbers down, a lot of times, if the deal makes sense, it'll actually cost you more money to not
Mhm.
do the deal
Exactly.
because you're losing money. And I've seen so many deals. We do this, at my company, we help break it down for business owners. And a lot of times they're like, wow, like, and again, most people don't understand how to use, financing as a tool. And, you know, most people in their business are good at whatever their business is, but financing, accounting, these aren't things that, unless you went to school for. And even some people that go to school for, like accountants, are very risk adverse. So they'll get the numbers, but maybe not want to take on the risk. No knock to accountants. It's just typically
Yes.
in that type of DNA.
And I think
Um,
I think you were so true earlier as well when you said that, we're taught about just the debt being bad, but it's really because we've seen people use it in that unprofitable way, in a way that gets you into a hole that kind of like really that you have to work yourself out of. So it was that fear around like, don't get yourself in a lot of debt, pay off your house, you want to make sure that you're living, but you're so true with saying like there are opportunity costs, and sometimes you're missing out by trying to be so debt avoidant. So how does your business with helping people to obtain business funding help you to work smarter and do less in that sense?
well, listen, I think, just borrowing money is not going to help you, work smarter. But if you were
I
to
like that
borrow
you said that.
money, right, like right, you could borrow all the money in the world. If you don't put money to work in the right way, then it will be costly, and it will wind up being bad debt, right? I'll answer your question, but this is something I talk about and bring up, and people always like look at me, and then it makes sense. Whatever business you're in, we all are really like running little mini hedge funds.
Mm.
And because in business, I don't care if you own a little ice cream shop or a pizza shop, or you own a big business, right, that does tens of millions of dollars a year. When you own a business, you have when you start a business, you have to have money. Like it's you got to pull it from somewhere, your personal savings, friends, family, credit cards, debt, whatever, right? But you're taking money and you're putting that money to work. And the whole goal is to put that money to work to go and make more money. It's essentially what a hedge fund does, right? So you have to really get good with money on how to put it in work. So how to work smarter and harder. Okay, well, you want to hire and build a team and employees. You got to hire people. That money's got to come from somewhere. If you don't have enough of it right now, you might want to borrow to do it. Now, if you're borrowing to hire employees, that's great. But those employees better be doing things that are bringing profit in, and revenues into your business, right? So, you know, working smarter is, building team processes, systems, and putting the right people in place to help build and grow a company and remove yourself, out of the day to day and become a business owner, not owning a job.
Yeah.
And I think that's probably what you do amazing, Shanice, is you help people build these processes and systems. And I always love talking to you because it's like a breath of fresh air because, prior to meeting you, that's what's helped me be, successful, in my business. And you have to build the processes and systems. And, I think you've got to be willing in business. It's a constant game of growing and then taking 2 steps back to take 5 forward. And, I've had to, to put people in place, I've had to take steps back in profit
Mm.
and money that I would have paid myself to put the right people in place, to put the systems and processes in place to invest in myself and in the business, to take a few steps back. And it's painful. You're like, oh, I finally got here. I'm finally making some money. And then you like unwind it. But then that growth
Yeah.
is, getting to above and beyond where I was and then make more money than where I initially was. And I've done that time and time again. And it just gets, as your business grows, those step backs just become bigger. Those step forwards become bigger. The step backs and loss of money becomes bigger. The steps forwards and gain and money become bigger. But it's this never ending, battle of doing that. Some people get it, they have the right mindset around it, but you've got to have the mindset around it. And you got to understand, like, because it can get fatiguing and tiring, this like steps back, step forward, steps back, step forward. And, I always
It's
thought when
that
I got here,
balance.
it would be, and you think like, oh, when I get here, it's going to be all good. But when you own a business, unless you sell it, you're in it, you're involved, and you got to keep it
Mhm.
going and you have to keep changing and the market changes and things change. And it's this never ending adjustment. So you either got to fall in love with that stuff and appreciate it and keep your energy up and your mindset right, or, the business will kick your ass. And one thing I just want to say here too is like, you know, what I'm doing and this growth and, commitment to growth. Listen, some people want to get to a certain place and they're happy with that.
Mhm.
And if that makes you happy, that's okay. But if you want to get to next levels, you want to make more, you're going to have to do more. You're going to have to think outside the box. You're going to have to constantly upgrade your processes and systems. And you're probably going to have to take some steps back and invest into your business.
And I completely agree with you. And that's why a lot of our clients, we do our 90-day action plan to really get that vision. Like, where do you want to go? Because everyone's goal isn't to make 7 figures or 8 figures. It can be like, I want to have this amount of money because I know that when I back it out, this is what I need. This is going to produce a low stress, not have to, manage too many employees, not have to be in the day-to-day weeds of things. But I know that this area will get me to what I want with the goals that I have. So in saying that, for a lot of us who might want some business funding, I know I've gotten so many text messages saying you can qualify for this amount of money up to this
Yeah.
amount, sign up for that. So I would guess, like, hearing the news, hearing that like sometimes banks are tightening up on lending, and then getting these text messages, I wouldn't think that they are really tightening up on lending. But then, the interest rates. So are banks really tightening up on lending? What is going on in that world?
Well, yeah, it's actually a really great question and amazing timing for the question. First off, we don't send those BS text messages, and
I
they're so
haven't
cheesy.
responded.
We'll communicate. Once you reach out to us, we'll communicate with you via text as a convenience. But most people find us online because they read something great, or they come through, a referral, a trusted source. Yeah. So right now, it's probably, listen, I founded in '07. I went right through the '08, '09 recession. I also
Mhm.
lived through the dot-com boom and bust, and then 9/11. So there's, multiple
Yeah,
things I've seen, but '08, '09 financial crash was insane.
it was.
Right, right now, though, coming out of COVID, we are in like one of the wildest times in so many ways. But banks have tightened up. But the reality is, banks have tightened up, but there's a lot of access to capital in the non-bank lending world.
Tell me
Private
more.
equity, I'm going to talk about that. And private equity and venture capital it's still, that money's out there and they're looking to put it to work, but they're really diving deep into where they're making those investments, and they're just tightening up. And I think, putting a little bit more focus into where that money's being parked and into maybe more profitable businesses or more established businesses. So, where private equity and VC, it was very easy to raise money, a few years ago, and especially before the pandemic. But so bank lending has completely tightened up. But what's important to understand
Was
is
it even ever
bank
loose?
lend.
Because I remember, like, yeah. I remember, like, as a business owner, though, it's always been like harder for us than as a W-2 employee. Like, I go in and I'm like, oh, I'm making good money. I can go show my, 1099s and stuff like that. And they're like, no, you don't qualify the same house that you qualify on half the amount when you are a W-2 employee. And I'm like, this is crazy.
It's so crazy, and banks were always tight. What's happened with banks is banks are focusing on doing larger fundings,
Mm,
larger companies. Banks really want to do deals that are above $10 million,
wow.
and
That, like,
they
takes
want to do
out the
10.
majority of people, though. It takes you out of it because a lot of us mom and pop shops, solopreneurs, or even like small business owners, we don't want to get $10 million. That's when that scary
Correct.
feeling comes into play too.
Under 10 million is like 90% of most businesses. And small to medium sized companies, typically have, borrowing needs of, 100K to $5 million, right? So obviously, 1 million to 5 million, you start to go to, bigger businesses, bigger than mom and pops, but still in the grand scheme of things, you're talking about companies doing, 10 to 20 million in revenue. It's a lot of revenue, but in the grand scheme of business, it's not, that's not a huge business. That's still considered a small business
Mm.
typically. So, but yeah, that knocks out like the majority of everybody. And because of COVID, they've really tightened up. So they're looking for bigger businesses with a lot of profit, but more importantly, collateral. And collateral are typically 3 or 4 key things. Real estate's the obvious, but B2B receivables are collateral.
Okay.
So if you're a
The money
small
coming
business
in.
selling direct to consumer, you don't have B2B receivables, so you can't leverage those.
Mm.
And then it's inventory, and then it's like heavy machinery and equipment can be considered collateral. So you've got real estate, B2B receivables, inventory, and equipment. Most typical businesses, if you don't hold inventory, then that knocks out collateral. You don't have heavy machinery, that knocks out the collateral. And then you have B2B receivables. If you're not, selling to B2B customers, like if you're a business that sells products to Target, you could leverage those B2B receivables to get a line of credit. But if you're, selling stuff online, e-commerce, direct to consumers, you don't have receivables. If you're doing drop ship, you don't have inventory. You don't usually have a big equipment. So right there, and if you don't have real estate to leverage, you've just completely knocked the bank out. If you're
Okay.
not showing a lot of profit, even if you have some of that stuff, you probably knocked the bank out today. So, so you move from a bank lender to non-bank lenders. And then there's a whole world of non-bank lending. And this is typically where my company, National Business Capital, focuses. We have 75 of the nation's like leading non-bank lenders on my platform. And some of them focus on specifically financing equipment. Some do lines of credit, some term loans. There's even non-bank SBA lenders out there that all they do is focus on SBA and they're not really a bank. So you have to understand all these lenders and all their guidelines. And as a business owner, you got to really understand where you fall in. Now, most business owners don't understand this. It's very confusing.
I was about to
So
say,
when you
Joe,
reach,
you're about to start losing me. You're talking too technical. I like to do less.
right? So you see, right? And we haven't even like dived into like, your business, what's going on. And then based on your business, the size of your business, the revenue, your credit, your cash flow, all of these things will make up which lender is going to approve you or not. So this is where we bring so much value to the table. What people ask me, like, you always say, like, there's that question, like, what business are you really in? Well, what business are we really in? The obvious is we're in business lending, but that's not what we're in. We're in the business. We're like a time saving machine. We help business owners. We're in the business of advising, helping business owners and saving them time. And they come to us, and in a very simple, easy, quick conversation based on what their need is, what their business is, a few simple questions about their business, we can really break down very quickly, okay, you're going to get approved for this lender, and this lender, and you're not going to get approved for this product at this lender, and here's why. We'll tell you why. We'll help you understand it. And then, very easily we'll say, basically, you're probably going to qualify for, $100,000, $500,000, $1 million over these terms at this rate. Does this make sense? And if it does, we'll tell you exactly, what documentation we'll need. We'll help collect all that. We'll package it up and we'll present it to underwriting. And we do all that for you so you can stay focused on your business and not get wrapped up
I
dealing
love
with
that.
submitting all the back and forth and all the stuff.
I love that because that paperwork aspect, it can be a beast sometimes. And it's like, do I really want to do this? They're asking for all these things. They're asking for my second born child. They're asking me to keep writing down all these things over and over again. So how would you be able to determine how much debt a business can handle?
So, I mean, there's not like an easy question, for that. It's really determined on a number of different things. We're really going to look at the cash flow of the business, the gross revenue of the business. An easy way, most businesses will typically qualify for about 10 to 20% of their annual revenue.
Okay.
That's an easy rule of thumb. It's not like 100% accurate, but it's an easy way. So if you're doing $1 million a year, 100K to 200,000 is probably realistic.
I think that's a great thing.
It's an easy, just simple napkin math, but there's more that goes into it. What's important to understand is that, let's say you're in the construction business. We work with a lot of contractors, construction, subcontractors. We love them. They're helping build the country. We think they're great. Or like a manufacturer, do a lot of manufacturing, wholesale distribution. My point is, if you're going to go and buy equipment, we don't want to leverage your business and your cash flow. We want to leave that alone. We'll pull in an equipment lender and finance that piece of equipment. And then that piece of equipment will be used as collateral.
Okay.
So let's say that
I've heard of the equipment loans a lot easier and more frequently than I've heard of some of the other business loans. So yes.
They can be if you work with the right lender and sometimes it can be easy. Sometimes that can actually be complicated. But, if you're a construction client and you're doing $1 million a year in revenue, if you got to go buy $150,000, $200,000 of equipment, we'll go look at an equipment lender and finance all that equipment, right?
Nice.
But then we could still look at your business and your cash flow and potentially give you a line of credit or a term loan separate from that based on the business.
Okay.
And so you can really, it's very important that when you're going to leverage your company, that you're doing it in a structured way where if we can do equipment financing, we want to do that over here, right? And we want to keep that with this lender. There's collateral. It's the equipment used in it, but you've kept your company open to get working capital to now maybe go make the hires to run that equipment or do more jobs or whatever.
Mm-hmm.
And a lot of times we'll see people use a line of credit or a term loan, and then they've locked up all their whole business, and they use that to go buy equipment, and the terms are more favorable and make more sense to use an equipment lender because usually it's a longer repayment period, a lower rate. So it really makes sense to talk this through and to think these things through, and also to plan out, like, what are your plans for this year?
Mm-hmm.
What are you going to be doing? Like, what does it look like? What are the jobs that you're looking to take on? And thinking ahead, a lot of business owners wait to the last minute, then they get a job, they're not prepared, they don't have their financial statements in order. You want to have all this stuff in order. You want to have your financial statements in order, your profit loss balance sheet. You got to have your books clean and in order, and you want to think ahead. And then you'd want to work with a financial partner like us that can help stage these things out. We do this all the time.
Okay. So
Makes a big difference in your growth.
So where can a business owner go to talk to you and get that loan of up to $250K in 4 hours?
Yeah, well, we do that up in 4 hours, up to 250K. We do deals all the way up to, $5 and even $10 million. So, we work all over the place, typically 10 to 25K, up to 5 to 10 million bucks. You can go right to nationalbusinesscapital.com. That's nationalbusinesscapital.com. And you can go there, connect with my team, make sure that they, mention that you saw this podcast with Shanice. And, if you want to follow me, you can check me out at Grow by Joe. That's Grow by Joe. And you can follow me on YouTube, LinkedIn, and I'm constantly sharing a lot of this great stuff, in my videos.
So thank you so much, Joe, for coming on. I really enjoyed our conversation, and I know it's going to really help so many of us grow our businesses.
Good stuff. Thanks for having me, Shanice, and thanks for all you do for the small business community.
This has been an amazing episode of Do Less with me, Shanice Miller. Share this episode with anyone who needs to hear this today. Leave a 5-star rating and review. And remember, if you're an entrepreneur and need to do less in your business, click the link in the description to work with me.